On the podcast this week, MTD this, MTD that. What is MTD and does it affect you? Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business.
What Easter egg did you get this year, Simon?
What stroke did I get this week? What did you say?
I did not say that.
Say again.
I said, what Easter egg did you get this year, Simon?
Yeah, that's a good one. I had a Toblerone Easter egg the chocolate was so damn thick on the Easter egg that I felt really sick after about 3 bites. I really like Toblerone, but it was like massive. What Easter egg did you get this year, Claire?
Well, I did put a Galaxy Ripple one down because I thought, I really like Galaxy chocolate, and the idea of just having like a giant Easter egg all of Galaxy chocolate is really appealing. But then I saw a Terry's chocolate orange and I thought, strictly not an Easter egg, but it's round.
Strictly not an Easter egg, it's a bloody orange.
And actually, a Terry's chocolate orange is a damn good chocolate. So yeah, that's what I went with. I didn't have the same problem as you. I ate half a Terry's chocolate orange in one sitting. Yeah.
You don't really have a problem with down in an Easter egg.
No, I don't.
Whole, whatever that is. Yeah.
What I did find interesting was, I mean, we don't really get Easter eggs, do we? We had a token visit to Tesco's and there were still some Easter eggs.
So we bought our own. An Easter egg
But
I didn't even buy yours. I bought my own.
The shelves were still full of all of the, dairy-free, vegan, all the crap that nobody really wants that, clearly is dying out at the moment. So I think I can imagine.
Is that yours? Oh my goodness! Newsflash: is that your take that you think these vegans going to die out?
Well, I don't think it's going to die out, but I think it's going to. These free from sections and vegan sections, they are statistically, vegan food in particular. Obviously, a few years ago was like the latest rave of people getting investment into these countries, and the valuations have just like dropped like a stone. Turnovers dropped like a stone. It's just not as popular as it once was because there's now this push to sort of like avoid ultra processed foods, and the vast majority of vegan food is ultra processed.
Tell you what, you should have done this as News Story of the Week. Can you dig out an actual news story for News Story of the Week about the decline in veganism, please, for next week? Because I'd love to see that if that's an actual fact. Because I'd like to know more about that. Because that is the first I've heard. I thought it was a thing that's continuing to grow all the time.
No.
Wow.
It is declining.
Well, should we find out? Should we get a real news story this week and see what that's about?
Let's have a look at it.
Crack on. So this week, I just was shocked about this. Price of alcohol-free beer is rising much more than the real thing. This is getting wild, isn't it? Like, alcohol-free beer is now like, it's almost annoying that it was as much as alcohol beer. But in the last year, alcohol beer has increased by 8.3%. Non-alcohol beer has increased by 15.5% on average, nearly double the amount of the alcohol versions. Now, what do you think this is? Well, a couple of things we need to talk about, don't we? First of all, why bear in mind that the duty alone on alcohol is what? Like 40% of it or something? It's pretty large, isn't it?
No, alcohol duty isn't that high. It's not the duties, it's like the VAT and it's everything that goes into it.
But if you took, first of all, alcohol-free beer doesn't have alcohol duty on it, does it?
No.
So
I don't believe so.
So that's massive. That's like saying to somebody, if you said to somebody, you're going to go VAT exempt, that would make a massive difference to the price that somebody sold it for. It's what hospitality are crying for. Is what?
It's not VAT exempt. Yeah,
no,
but look,
I'm trying to make the point that in hospitality, they're saying if you took 20% off hospitality, they could survive as a business because they'd cut the prices and they'd attract people in and all the rest of it.
Anybody that is in food manufacturing, food production, anything like that, knows that the biggest cost is not the ingredients.
Okay.
And so it's actually the production, the machines that you're using, the production staff in particular at the moment, wages are going up, all of those kinds of things. And, making alcohol-free beer is quite a complicated procedure.
I love the way that you said that, like you make it, like you have any idea. You just read that, have you? I mean, I agree that it seems plausible, but what if we just been spun that yarn by the brewers?
Because you're having to make something by its nature is fermented and therefore produces alcohol and then remove the alcohol.
I think I just wanted to challenge, like, I understand that's the argument, but I just wanted to challenge, what if we're all just being spun that? Like, that is the argument, but there is no argument. They're just making 40% more profit on it.
Prisoners make alcohol, don't they? They make hooch in prison. That's how easy it is to make beer and things like that. So, okay, it's not easy, but that's how possible it is to make beer in a simple form. So then to try and remove the alcohol from it or limit how much it ferments is very, very difficult.
Okay, so you're defending the breweries on this one, are you?
I'm suggesting that the vast majority of the cost of these drinks is not the ingredients anyway, and therefore we should be looking at what's happening to business rates, what's happening to taxes, what's happening to the cost of employment, and that's what's driving a lot of this price.
Jesus, when I'm reading this story, there's a link to another story called The Hidden Health Risk of Alcohol-Free Beer. Do we need to look at this?
Oh. Despite no alcohol alternatives being the healthier choice.
Demand for low and no boozing drinks is rising, but the sugar content is often high.
Yeah.
Oh, there we go. Cool, you're saving one side, you're done in the other.
No, do you know what? I would also say that I see this with mocktails. Like, for example, if you go to, if you go and look at a cocktail list, you can get something like a martini, which is like pretty much, it's just pure alcohol really, which, there's nothing more beneficial for your system than pure alcohol. No chemicals in it, or it's just that like hard alcohol stuff. And you look on the the mocktail list, and it's all like sugar-laden juices and cordials and just crap that actually you think, I'll just go with like the martini or something classic like that, get some hard liquor inside me and skip all the sugar.
Great. Well, there you go. So
get back on the
to be honest with you, I'm a little bit on the, I thought I was dead. I poo-pooed it in at the beginning, the whole non-alcohol. But to be honest with you,
you're dead into it now, aren't you?
It makes me feel so good not drinking alcohol that as I'm getting older. But I do like a beer, and they've got really close now. I can still tell. The thing is, they just taste a bit watery. But they're so close now, especially some of the craft beers. They're just now become an enjoyable soft drink, and in the adult soft drink world is pretty crap, isn't it? It always has been. No one's really nailed that apart from Schlur. Do you know Schlur?
I do know Schlur. That's like a throwback to like the 90s, isn't it?
Yeah. They were the ones that were trying to nail the adult soft drink world. But there you go. Right. Thank you. Let's move on to this week's deep dive, where we're going to really nail some tax things. So I need to know, Claire, what is going on, because if I hear the word MTD one more time in my emails, newsletters, on the news, whatever else, it's all anybody's talking about. So can you please tell me, what is MTD? Do I need to worry about it with whatever hat on I've got, business, property, whatever that is? Are you going to just do us a complete guide for people so they can just sleep at night now?
Yes. So we're talking today about MTD MTD for income tax. This has been talked about for a number of years now.
What does MTD stand for?
Making tax digital.
Making tax digital.
So business owners might be aware of that because probably over the past like 15 years now, HMRC, I don't know why it takes HMRC so long to implement anything, but that's another topic for discussion. About 15 years ago, they started digitising the payroll system, and now we have what's called RTI in the payroll system, real-time information, where when you pay people, you have to report that information to HMRC straight away. And then about 10 years ago, I'm going to say, no, about 5 years ago, they introduced it for VAT returns, which meant that you weren't able to submit paper returns to HMRC anymore. And now they are doing the same thing for income tax, but they're going a little step further with income tax. And HMRC are trying to move towards digital reporting.
Okay.
HMRC's argument for this is that when people are taking numbers out of systems or collating numbers on spreadsheets, and then they add them up and they manually put these numbers into forms, be it a digital form on their website or be it like a written form, that a lot of mistakes are made. People might just simply write the wrong number down and things like that.
Which you fully understand. I mean, like, we wouldn't run a business where, we ran our business like that because of the amount of human errors that would happen. We try and put everything through a system. We try and cut out as many opportunities to move a number from one place to another, don't we? That's just sensible for once. So
what they've done is now they're focusing on income tax and they want to move to digital reporting. And what this means essentially is that you must keep digital records as well as filing digital tax returns. Mm-hmm. So it's not enough to have a box of receipts in a cupboard somewhere, add them up in a book once a year, and then send that information to HMRC. You must keep your receipts digitally.
absolute piece of piss. And to be honest with you, it's less efficient now not to just take a photo of every receipt and save it in a folder drive in the cloud than it is to keep the bloody box of receipts. So
I'll come back to that in a second.
Should be sensible. But yeah, I'm sure you'll come back to it. I'm sure there's a million reasons why old people won't be able to do this. But
so the next big change is that at the moment you file one annual tax return. So the tax year runs from the 6th of April to the 5th of April every year. And you've got until the 31st of January to file your tax return and pay your taxes. But that is now changing. And instead you must submit quarterly updates to HMRC.
Okay. So up until this point, I've been really on board with everything that you've said until you've just said that. This is a travesty and a disgrace to efficiency.
As yet, the government have not really given a reason as to why they are asking for quarterly updates and not annual
it's
updates.
Because they want to more accurately charge your balancing on account things, don't they?
Yes, but there doesn't seem to be a strong argument for that. They've talked about the fact that it allows them to predict tax revenue better, that it allows them to predict payments on account better, etc., etc. But it does seem quite a leap to go from mandating that somebody has to do one annual return to now you've got to do 4 quarterly returns. Yeah. No benefit whatsoever to the...
Start with biannual, do a 6-monthly one,
yeah.
And then let's take it from there. It's
now,
quite a lot of work to do a self-assessment every quarter, isn't it?
My personal opinion and the opinion of a lot of other accountants is that quarterly payments will be coming soon as well.
Oh, I'm sure.
Because, and I do, unfortunately, I see the transitional difficulties that the government is going to have with dealing with this. But if you are in a job, if you are on PAYE, you pay your tax every month. Every time you get paid,
I know where you're going
deducted.
for this. I'm going to rip you down if you go there.
And if you are self-employed, you have a whole year plus 9 months to pay your tax.
Yep. And if you're going to take all of the risk of running a business, starting a business, like everything, by the time, like, we are now at the point where they have taken away every benefit that isn't aligned to being an employee. And this is the final one, which is you can actually pay yourself first and not the government and actually manage your cash flow better about how you run your business. And they're about to take that one away. If they ever wanted to literally destroy entrepreneurism, put this country back into the dark ages compared to our international competitors, this is the final thing they can do to do it. Well done, government.
God, you are so angry, your face. Well, look.
I'm just angry about everything because this is just like, that we are now at the point where it's no longer funny, yeah? It's not funny anymore.
I think that I'm finding your reaction to this a little bit funny because you're not even covered by MTD, but you're very passionate about it. Look, all I'm saying is my opinion, and a lot of other accountants, is we can foresee this coming in the future. The transition arrangements are very difficult because essentially you're going to be saying to people, we need you to pay 2 years worth of tax in 1 year. The benefit for the government is that they have 2 years worth of tax paid in 1 year. So they are essentially speeding up all of their tax take by an entire year. So
if they do this, the government, basically, I see why it worked for them because they'll get a massive windfall. But it's a one-off benefit to them that only whichever government does it at whichever time gets that benefit and waves their flag and goes, oh, it's great, we got a load of money that we didn't have.
Okay, so anyway, moving on. What is in scope? Okay, so anybody earning over 50k a year from self-employment and rental income. So at the moment, they are the only things that are covered by this. So it's not dividends, not any earned income if you have a salary. Even if it's your own limited company and you've got a salary, that doesn't count towards it. And not property in a limited company only. So it's rental property where you own the properties in your own personal name, not through a company. And it is self-employed income. So if you're classed as a sole trader. And a key thing to understand here is it's your total income, not your profit. So it's the turnover that you're generating. Okay. And some people listening, I think most of our listeners that could be captured by this would only probably be bought into the property income. And some people might own the properties jointly with a partner. If you own the properties jointly and they're 50-50, then you just split the revenue, the rental income in two. So if you've got if you've got 60k of revenue, 60k of rental income, and me and you own the properties, we split it in two, we've got 30k income each. So therefore we're not bought into it.
So they're getting like a bit of your self-assessment tax return, but not the whole picture. What on earth's the point in that? So they're not even moving forward that much. They're just like getting, I'm going to get a bit. So they're not going to see my salary or my dividends, but they will see my rental income. What's the point in that?
Because They are starting, and then over the years they are broadening the scope of it. So at the moment, from April 26, so it starts the 6th of April 26 if your income's over 50,000. Then from April 27, that threshold's been lowered to 30k. And from April 28, it's planned but not yet written into legislation. So this could still change. So it would be income over 20,000.
It actually feels like it's just more complex. So I need to do like the self-assessment that's different at the end of the year than the one I do quarterly.
Well, the very fact that it has to be done on digital software means that the software handles it. So essentially, anybody that like uses Xero for their company, you end up doing exactly the same thing for your self-assessment. You need a piece of software that you pop all your receipts and income into throughout the year. It manages the quarterly submissions for you, and then it does the annual submission too. Okay. So just to clarify what's out of scope for now, and I think this is the important thing, is
it's
that,
all coming.
This is changing legislation. It's new legislation. And over the next 10 years, we expect to see the scope expanded. So it doesn't cover anything to do with your limited company. It doesn't cover anything to do with directors' earnings via salary or dividends. Partnerships as well. So if you an LLP, like an actual legal partnership, which is registered, then again, that's not included because the complexity of that is too great. And anyone under the 50k threshold. So essentially, if you run a limited company and you don't have rental properties in your private name, you don't have any other income, then you don't need to worry about this at all at the moment.
So to be honest with you, for the vast majority of our listeners, the key will be properties that are in their own name, which I'm sure quite a few people will have legacy properties that are in their own name and not on a limited company. So it's really, the key for them is about whether it's generating more rental income than 50k at the moment. And then that'll be 30k the following year. That'll drag them into this, and 20k the year after. So if at the moment from April 2026, if they've got a couple of properties and they're not generating more rental income than 50,000, you don't need to worry about this for another year.
No.
If they're generating more than 30, you need to worry about it next April. And so on and so forth. So stay in touch with this.
Yes.
Yeah, got it.
And the limit is determined by your last tax return. So at the moment, the tax year that's about to end, obviously nobody submitted their tax return for that yet. So the threshold of your 50k is actually determined by the tax year that ended in 24.
Okay. Yeah.
25. In 25, sorry. By the tax year that ended in April 25, that determines whether you'll be bought into this in April 26.
Okay.
So I would say that, like I said, the vast majority of the people that listen to this podcast are not going to be captured by MTD because they don't have self-employment or rental income in their personal names. A lot of people, if they've got rental income, they'll be thinking, what can I do to escape this? And unfortunately, if you've got rental properties in your name, then there isn't really much you can do to move those into a limited company, because when you move them into a limited company, generally it counts as a sale. Therefore, capital gains tax plus stamp duty, that's generally the killer, is payable. There is one tax efficient route that's available where you can essentially put the properties into a partnership and then convert into a limited company, and that is a very tax efficient thing to do. But the threshold for this, there was a very famous court case, and the threshold was that basically it needed to be seen as a job. So you need to have a certain amount of properties or a certain income from it that means it's classed as a job. It can't be like a passive investment.
Very difficult to
prove. Generally, I would say if you've got less than 10 properties, you're probably not going to qualify for this. But really, I'd say to be sure, the threshold's more like 15 to 20 properties that you're personally managing. So there's lots of software out there if you are captured by this. Xero's got some great free tools available.
I think they're all offering them for free. I saw Sage advertising their free one, Xero free one free. I guess these guys are all using it as their like freemium entry to their software. So they're trying to land grab the market, aren't they, to get people into their ecosystems. And then if you want the paid for stuff, then you'll get that later on. So it's quite a smart move, I guess, from them. That. But it means that you don't have to pay for this software. You can just get it all for free.
And generally the going rate, it seems like sort of your entry level bookkeeper accountant is charging you sort of £150 a quarter for this to, that would be you submitting all of your receipts into the system.
Can you not submit your own
you can do it yourself.
I thought the benefit of being able to use the software means you don't have to use an accountant.
No, there are certain softwares that are locked to the user submitting the tax return.
Oh, we need to know this because obviously
not all of them are. So you need to go and research this. Basically, HMRC will have a list of all of the software that is MTD compatible. And some of the software will not allow you as an individual to submit your tax return. I believe Xero might be one of them, Sage as well, because they're encouraging their software is really aimed at like accountants. That's kind of their their marketing push now. They want the accountants to do it. But there is some software that does enable you to do it yourself.
Oh, so I can't use Xero. That's annoying, isn't it?
Well, I mean, luckily you've got me, so you wouldn't need to do it.
Oh, you're not going to charge me?
Wow.
You will.
Yeah,
you will.
I will.
I know you will.
I will.
Okay, that's good. I did have a question. I can't remember what my question was. I think it was about submitting my own returns. So that is annoying. How does it practically work with this software? So at the moment, obviously, I do keep everything digital. I'm just thinking, I'm putting my property hat on because I've got some properties that are
You're going to be
in my
captured
own
by
name.
this next year.
No, I know. And I just, obviously, all my receipts and invoices and everything for expenses are all just saved in a drive. Do you just upload all these into Xero or whatever software? So you actually upload the invoices. So actually, would I, to be really efficient, rather than save them to the drive, would I save them straight into Xero every time now moving forward, and Xero will become the source of truth for all my documents?
Well, again, this depends on what software package you take. So the entry-level free versions don't have like that attachment storage and things like that. You manually have to key the information in. But for a small price, you can get like the document reader where you upload your receipt and it extracts everything for you.
But hang on, I thought the purpose of the Make It Tax Digital is that you had to keep digital versions of your receipts. And
you don't have to keep the receipts digitally. You have to keep the record, i.e. a record of the transaction digitally. So that could mean that
just a spreadsheet then?
Yes.
Can you use
in
a
some
spreadsheet?
instances, there is some bridging software that will take a spreadsheet and that submits it. But what I would say is I'd caution people using spreadsheets, because when HMRC introduced MTD for VAT, a lot of companies did their VAT returns on spreadsheets.
Yeah.
And at the time, HMRC said, look, for the first couple of years, we'll let you get away with this. But then eventually they said that copying and pasting between one spreadsheet and another is not a digital record.
Hang on a minute, because this is this is actually really flawed. So what you're saying is that I have to type in from the invoice into the accountancy software what the invoice says.
Yeah.
So that is the human error bit we're trying to avoid. So it's not achieved anything.
And then just to make it, just like for clarification around that spreadsheet thing. Okay. So if, for example, you downloaded some software, say, for example, you had your income and expenses in different spreadsheets, and then you had like a totals tab. So you had a spreadsheet for income, a spreadsheet for expenses, and you wanted to combine them into another spreadsheet. You cannot copy and paste. You would have to link the spreadsheets by just simply saying equals this one here. You know, like you do it in Excel where you link the cells. You can't copy and paste between spreadsheets. That's not a digital record.
Okay. This is just...
It's just fucking stupid is honestly the only way to describe this, because this is not helping the taxpayer. This is not reducing mistakes. This is just adding a layer of bureaucracy
we have
for
software
no reason.
where you could upload your invoice into the software, and the software just reads the invoice and puts it into the digital record. It's that good.
Yes.
But we're not using that. We're deciding to just key it in
They
manually.
absolutely are available out there, but they're the paid for versions, aren't they?
Mad. Okay. Well,
it is mad. Look, what I would
know.
say is that actually when you look at the demographic of the vast majority of people that are doing tax returns, and the age of them is not what you would think. It's not like young whippersnapper business owners.
Oh God,
it's
no, they're
actually,
in their 80s.
It's people with investment, it's people with pensions and things like that. So that's why this is...
Oh, it's madness how difficult this will be, because...
quite light touch from a digital perspective.
It amazed me when I talked to our mortgage broker how many of her clients are like quite old because they have big property portfolios and whatever else, and she says it's just madness that they just can't even get their head around the paperwork involved in remortgaging, that they're sat on like stupid 8% mortgage rates, like reversion rates, because they just can't be bothered with the hassle of it, and they are paying the banks an absolute fortune just because they can't even think about the paperwork involved in a remortgage. So I get that this is going to be quite hard for quite a big cohort of people that are just not in the digital world.
What I will say is that if your accountant bookkeeper, if you've been plagued with emails or communications from them saying MTD, 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 that's a sure sign that you've got like a classic micro business sort of sole trader accountant. And so if you're a slightly bigger business like 500k, £1 million plus, then that's probably a sign that you're not with the right accountant.
Not with the right, yes, that's a good shout actually, like a real sign that you're in the wrong room,
because they're just talking about things that are not relevant to you.
That are totally not relevant to you, Because actually, you wouldn't have mentioned this to any of your clients, would you? Because it's not relevant.
But people are asking and
Unless
they're
they've
saying,
got
I've
property.
seen this on LinkedIn. What do we need to do about it? So I thought we'd just cover it off so that people know that they don't need to worry about this, actually.
Yeah, but that was my point. Is like, I see this all the time, whatever else. I'm sure like people that listen to this do as well. And it's more like, is this for me or isn't this for me? So I think it's been important to go through it to sort of say where it could be for you. Because I do think the key bit is that property bit where it is pretty concurrent that business owners with multi-million pound business turnovers generally have property, and a lot of them will have it in their own name from a legacy period before limited companies.
A lot of our customers, our demographic is similar to us. It's like people in like their 30s, 40s, maybe early 50s.
Possibly.
So therefore, we've probably, by the time we might be slightly different to that because we were quite good with our cash, but a lot of people, by the time they've got money, they were probably at the point where definitely you're only investing in property through a limited company now. Yeah, so therefore it's a little bit rarer in our demographic that people have got property in personal names. So so basically the crux of this is MTD for income tax means that moving forward from April you have to submit a quarterly self-assessment tax return. Most of our clients are not affected by this. It doesn't impact you if you're a limited company director, only if you have more than 50k turnover from self-employed or rental income. So if it becomes relevant and you're our customer, we'll tell you. Don't worry about it unless you're a sole trader or landlord.
Great. Good. Let's move on to this week's Profit Cash Growth Extra.
When I saw this, I thought, is this a joke?
Have I gone mad? I thought I'd put this in here because I went in the boardroom and you were using it. Basically, we're fighting over my flip
We are.
chart. We are literally fighting over my flip chart.
It's actually my flip chart. I'm just going to put that
It's actually my
there.
flip chart. You didn't use it for years, so I've claimed it and I took over the ownership.
Excuse me, if anybody goes to my YouTube channel, there is video evidence of me using that flip chart. That was what it was.
You know the rule in our house: if it's not used for 6 months, then it's anyone's game. Yeah, same with clothes, same with everything else.
It's not the same with clothes.
It is. And so my Profit Cash Growth Extra is a flip chart, pen and paper. Yeah, we're using it absolutely loads, probably more than we've ever used it in this digital world. What a fantastic and impactful way to keep something front of mind. I think my views on this, on like human behaviour and out of sight, out of mind, in sight, in mind. Like there is you cannot, in this digital world that's becoming more and more noisy, you cannot be more impactful than having something on a fucking wall in front. Sorry, didn't mean to swear. On a wall in front of you, very, very clearly. And I love a flip chart and a pen. It's as simple as that. So that is my Profit Cash Growth Extra this week. Any thoughts?
We do need to get another one.
Yeah, we need to. We can't fight over anymore. Anyway, thanks for joining us for another week's podcast. If you feel like you might have outgrown your current account and you'd like to work with Claire and the team at Profit Cash Growth, the accounts for 7-figure businesses, fractional FD services, and all of your outsourced finance function, do get in touch. Book a discovery call on the website, and we'd love to chat with you about where you are at with your business journey. As always, please rate, review, subscribe to the podcast wherever you listen to it. We really, really do appreciate it. And if you've got time to give us a little 5-star review on there, that really, really helps other people find the podcast as well. And as always, we'll see you again next week for another thrilling topic.